All right, so good morning, everybody. My name is Ekunda Oluwatoyosi. I'm also known as Banks. So I'm going to be the one taking you guys throughout the course of this study. We're going to be having like a very detailed breakdown this morning, which is our Monday live session. We'll be discussing XAUUSD and some other peers. I would also be looking at psychology session. We'll be having a conversation on psychology, and then we would also be able to discuss at length about zones and areas and how to like react to your profits and losses and the likes like that. All right, so let's commence. So one of the major challenges a lot of people go through, like when they are trying to get, when they are trying like to grow in like their trading journey, is how they somehow react to their losses and the likes like that. So psychology is one of the barriers that a lot of people go through and they like struggle with as traders. And that's one of the things that we are going to be discussing here. We'll be looking at that, those pressing challenges and then how one can solve it. And the honest truth is that nobody can genuinely teach you how you can maximize your own psychology except from your own self. What they can probably do is to give you like all of the adequate guide that you need. So that guide can sort of like shape you and ensure your profitability on the long run. So that when you already know how to react to your losses and likes like that. So yeah, let's start, guys. So now for gold, let's put this on the 4-hour time frame. Quickly. So this is a 4-hour time frame. Please mute yourselves. Chukwadu, mute yourself. Preach. All right. So now we have a high here, which is where a reversal happened from, I think, this morning. Because gold is getting crazier by the day. Because it keeps breaking the ATH, the all-time high. So the fact that it keeps breaking all-time highs makes it sort of complicated to actually trade.
Sorry, I can't see it. Like I can barely see it. Just zoom a little. Thank you.
So that's like
I make call. I won't call Jennifer. Man, waiting. I did what I go buy the things for the corner.
So that's the high that it broke there. If you can look at it clearly. So that's the high that it is stuck rather. So now if we then look at this low that is here. Please mute yourselves. Oh God. I'm not children now. Say the same thing every. So this is another area that is like the low, right? So if we then take this to like a D1 time frame, let's even see what's going on D1. D1 is showing us that that's a high there and this is a low here, right? But it doesn't still remove the fact that this pair is actually quite bullish, right? So what we can then simply do is we can simply come down to the 2-hour time frame and see what we have here. All right. So one thing is that just notice that one thing that we're going to be looking at now, anticipating, is that if we have a gold break above this high, we can sort of see the buy continuation pattern. And if we have a gold break above this low, we can see a sell continuation pattern, at least giving us 100 pips. Why am I saying that? Is because, first of all, this is a high. This high created a new higher high that is automatically breaking structure, right? Because it broke structure, this place here is a zone where market is supposed to return back price to and automatically buy, right? But what did market do? Market came down here, and instead of coming back here to actually buy, it came here, queued the stop loss region that is here, cleared it, broke the higher low area, right? Broke this higher low area and then push down price a bit. Now, this second candle that just formed is supposed to be a confirmation of either a continuation pattern to the downside or a break of the high. They'll be expecting the continuous buys. Are you guys understand what I'm saying? Let me show you the chart pattern. Let me draw the chart for you right now. You understand what I'm saying? So first of all, we had a high. And that high created a low. Then the low pushed up price, right? Automatically, market's supposed to come down back here and go up. But what did he do? Instead of selling at this point, he broke the low. He broke it. So for me, is either market come to this area like this same region. Is either it comes there and continue the sell pattern all the way down, or this paraventure continues the buy, maybe to this area, react a bit, come down, and then break. But once it breaks this high that is here, just like this high that is here, once it breaks this high that is here, they are going to be expecting the continuation pattern of the buys. I understand what I'm saying now. So are you guys what I'm saying now? So you automatically know that. So now it will begin to make more sense to you because you see it to appear 1, 2, or 3 times like that. So now you know that it's not just maybe paraventure any coincidence. So if you have a break above the high, you know what you're anticipating. And if you have a break above that particular low, you both know what you're anticipating. Why are you anticipating that? Because that area shows an area of complex pullback. And every zone that is a zone of complex pullback is supposed to be an area where I don't want people distracting me. So that zone that you have a complex pullback is an area where market support. This Zoom is recorded. You can watch it on YouTube. So that area where this place serves as a complex pullback zone, right? Automatically, market supposed to return back price into the complex pullback area, just like we have here. So this is the complex pullback. Market supposed to return back price here to actually buy because it broke structure above. But then automatically breaking past that low shows that there could be a continuation pattern of the sales. Provided market pushes back price up into that same sell area and it tanks. Is this getting too complex for you? So let me break it down again. So automatically you know that if you have a high here, this is the high. This high created a new higher high. Automatically you have a break of structure here, showing that this place is an higher low area. This sales was only supposed to sell to this area. Sell only to this area and continue the buys. But what did he do? He broke below this low. So automatically breaking below this low, where people had their stop losses for the continuation of the buys, shows that there could be a possibility for a sell continuation. And how do you get the sell continuation? Just like it is happening right now. This particular candle is a determinant factor of if market will continue to sell. What do I mean? Since it pushed up price like this, and what it did was it pushed up price into this area, this region. Since it pushed up price into this region as it is like this, it is supposed to automatically, just like it's trying to do, it pushed up price into this area that is here, then it wants to probably continue the sales, right? So if you get a break below this line that I now drew here, it shows that that sell is going to hold. So what was the first criteria? The first criteria was that it reacted off this other block area that is here, this higher low area that is here, right? Then it continued to push down price. Breaking below this area that is here, shows the sell continuation pattern. So breaking below this area shows the sell continuation pattern, right? And that's the reason why I drew this chart pattern. So if you get a break below this, 26.14, you can see the sell continue, at least giving you maybe 100 pips. But if you get a break above this high, then you still know that the buy continuations would relatively hold. But irrespective of whatever the analysis may be, since we've given a scenario for the sells and also a scenario for the buys, you should always try to apply risk management in between so that you are actually safe, because nothing is 100% guaranteed. So if I were you, I'm going to be marking out 2 areas right now. The short position will be starting from here. So for my short position, Carolina, I will something like this. So once I see the market pushes down price below this area, I can take the sales and decide to like tank it all the way down. At least maybe to like this area that is here. So I can decide to tank it all the way to that zone. Once I see the break below this area. Or, so if you then see a break above, which is this high, how are you picking? Give me a break below this, above that. So a break above that. And if you see a break above this high that is here, automatically, you see a break above 26.31. 26.31 area, then you can take the buys. At least maybe it should give you some sort of 100 pips buys. And the stop loss is like 50 pips, 48.6 pips actually. While for this other trade, the stop loss is like 51.6 pips, taking the sell range and all. And then that basically explains what we're going to be looking at for XAUUSD for the week. Now let's look at like one more pair. We'll look at like maybe like one more pair if there is. Let's check for one more. So that's like, and the reason why I'm marking those highs and low area is because XAUUSD basically respects highs and lows a lot. So if we go back and basically start back testing, you'd realize that gold reacts off certain areas, right? And what do I mean by that? I'm going to show you guys a detailed example of what I'm talking about. So gold is basically a pair that reacts to reversals a lot. Aside from these crazy buys that has been happening lately, we've had case scenarios where gold reacts to certain zones. What do I mean by that? For instance, now if you look at this particular area now, gold broke past this eye here. This eye was the area that was marked, right? So this eye was an eye that is actually on H4, right? So now gold pushing up price automatically broke past this eye. And what did it do? After breaking past this high, you see that it continued to hold that position all the way up. Now, if we look at another area, this area is a very, very solid area where gold was reacting from. And now, upon reacting in this area, it broke past the eye, and after breaking past the eye, we saw a relative continuation of the buy patterns. So if you look at it, if you start marking out zones, like instance, now we had this high that was here, market broke the high, continued the buy pattern. We had this high that was here, market broke, continue. So it's just that it takes a lot for you to be able to identify how to be able to spot zones where if market breaks the high to hold. And that's the reason why we run programs that can help you to be able to like mark out zones like that. So if you know you want to like jump on our programs that can help you identify that, you just send a message and then we'll have you sorted on that. So those are like opportunities where those are like repetition. So by the time you check the past data, you realize the fact that gold respects scaling in entries, respects right highs and lows. Now, how to set your stop loss for the highs and lows is very, very crucial and very, very important. And that's why I'm basically here to guide you. All right. And then, so now let's check another pair. Let's look at Euro USD. I really don't like Euro USD. Even if you're going to take the sales. There was a possible sell that could have been taken, which was here at this high. But I didn't see it earlier, so I can't take that sales. This should have been the sales that I would have taken. Yep. The other one would have been GBPUSD. So let's look at GU. So for GU, what do we have? We have we had this high that was here, then it created this new high. All right. So for me, if I'm even going to be expecting any sell continuation on GBPUSD, which is looking like the buys is what this is looking like the buys is what should hold, right? which is looking like the buys is what should hold. So let's put this on a D1 time frame first of all. So if we put this on a D1 time frame, what do we see? Okay, this area that is here. A solid one. Just put this back on 4 hour. So on the 4 hour time frame, what do we see on the 4 hour? On the 4 hour, what do we have? What do we have? What do we have? So on the 4 hour time frame, we have this particular area that is here. So now if we go down to 45 minutes time frame, let's see what we can get from the 45. Okay. What I'm seeing right now is buys. So which means you can mark out this area that is here as an area for the continuation in price. Right? So you can expect markets to come down into that area, maybe push up price. And it does make the stop loss what it is. Let's say it's 28 pips. Now let's take this 1 hour time frame. So the 1 hour, you can see a scenario like this. Is it perfect? Yeah. So GBPUSD buys, just as analyzed here right now. Yeah, that's what I'm saying. All right. So hold on guys, I'm coming. So that's like what I'm able to like analyze on GU for the new week. Okay. And then that cuts across our explanation on that. So the next conversation next thing we'll be discussing right now is the psychology aspect, right? So one of the things a lot of people battle and they need to realize in like their trading journey is the fact that there is no business whatsoever that doesn't have its own risks. There is no business whatsoever that doesn't have its own risks. There is no business you want to see in this world that doesn't have its own capital risk. So when a lot of people come to the trading space, you need to normalize the fact that you are going to have losses. It's inevitable. There is no some people have problem with they have problem with seeing drawdown. Like they can't stand seeing drawdown. When they see drawdown, that's when they know that they want to start messaging you. Some of them will even be crying because they are seeing losses. So at the end of the day, the same way you are crying because you had a $10 loss, the same way some of us are not happy because we had a $1,000 loss. So losses is inevitable in every business. But when you are coming into the trading space, you sort of have to understand that losses is inevitable and that you would always have that downtime. But the only thing that makes you stand out as a trader is the fact that you have a system that actually works for you. You have a system that you know that irrespective of whatever is happening as at that particular time, you know that your system would basically eventually, you see your system, you know that your system would still always work for you. And then you know that it's just a phase and it's going to pass. But when you get stuck in that moment and you don't start seeing, when you get stuck in that moment and then you don't basically start seeing more opportunities, you just get carried away by all of that unnecessary stress. And at the end of the day, you get carried away by that unnecessary stress. And at the end of the day, you just basically start feeling bad when you are not making enough profit, like that. So at the end of the day, like, you need to understand the fact that trading is high risk investment. If you know you are a baby, and you cannot normalize that, if you know you are a baby and you cannot normalize that, then it's just better for you not to basically trade. So you save yourself from unnecessary stress and headache. But if you know that you sort of understand the test of time and you want to be involved, in something that could give you a possible financial freedom on the long run, you have to stick there. There's nothing like, I lost money today. This, that. I'm not shaking. So at the end of the day, like, you need to understand the fact that losses is inevitable in every business. Like, you cannot, it's so far you decide that this is what you want to do. I've seen people that have done businesses outside trading. And by the time you're having a conversation with them, you would literally hear the things that they've had to like go through, the losses that they faced, and stuff like that. So on the long run, you realize the fact that every business whatsoever has its own risks involved. The only way you can scale in your trading is you reduce your risk one way or the other, and you maximize your winning potentials, scaling from like your entries to your exit point. So if you have a stop loss of like $5, you should always target to either taking that same $5 from the market or even higher, which means you need to, it happens to all of us where sometimes your risk to reward ratio might not be as perfect as possible. But like on the long run, you sort of would work every single day to amplify your risk to reward ratio. You would work every day to make your risk to reward ratio better. So at the end of the day, by the time you start creating systems and make sure that you've already arranged your RR, you've already worked on your RR to the point where you now have a very, very good risk to reward ratio. That way, you know that there are little things that will basically be bothering you. There are little things that will basically be bothering you because you know that, okay, you now have a system. I know that your system, for instance, now you know that all you basically need is to be correct at least 7 over 10, 8 over 10, sometimes even 7.5 over 10, because you've created a system and that system works for you. So that way, you are literally not even bothered about so many things because you have a system that works. So a lot of people need to go and focus on creating a system. Once you create a system and that system actually works, now the next thing you should now focus on is becoming valuable, right? So there's a certain level of value you put out to the society there that automatically you just start radiating positivity. So instead of crying about the fact that you are not profitable, instead of being sad about like so many things, instead of being angry about the fact that you are not making a lot of money, use all of that energy, channel all of that energy into ensuring that you are profitable and creating a system for yourself. So, and how do you create a system for yourself? Study the charts, go and back test. We have a lot of videos for you that's actually on YouTube. So you can go on the YouTube, watch some of those videos, quality videos. You can visit our website at www.goldeledues.com to learn Forex for free, at least the beginner aspect of Forex for free. You learn that you can watch the YouTube videos, join our free our signal room where we send trades almost every day. And we also do this Monday live session. So there's a whole lot of nuggets. So by the time you join all of this together, you should be able to derive at something, creating a system that works for yourself. So once you successfully create a system that works for yourself, then on the long run, you know that, okay, now I've created a system. What I need to do is now work on that system that I've created and then keep amplifying what I'm doing. Trading is not that difficult. The only major part of trading that a lot of us find challenging is how you react to your losses and how you react to your profit. A lot of people, when they're in profit, they get overly excited and they close their profits early. But when they're in losses, they hold the loss in expectation that it to go back into profit. So at the end of the day, that's like slow poison because you're just suffering yourself. So those are like one of the things that I wanted to talk to you guys about. So that way, the first thing we looked at for today was gold. We're able to mark out two particular areas where we can see futuristic buys and futuristic sales at certain areas, which we marked that out. Then the next thing we then looked at was GBPUSD, where we're looking at like the buy pattern, the buys for GUR. They were able to talk about different things. So most importantly, you need to focus on ensuring that you are the best version of yourself. That's one of the most important things. So create a system for yourself. Keep doubling down on whatever you've been doing that is working for you. At the end of the day, you should see results on the long run, right? So I usually say, let me stop recording right now.